An earnings alert on United Airlines at after-hour lows here after reporting a big miss on the top and bottom lines. Phil LeBeau is here with a CNBC exclusive interview with United CEO Scott Kirby. Phil, over to you.
Thank you, Sarah. Scott, first profitable quarter without payroll support since before the pandemic. That's the good news. The bad news is you fell short of expectations as well as your guidance in terms of capacity. Summarize, when you're looking at the quarter, the biggest challenge out there right now.
Well, look, first I'd say we are really glad to be returning to profitability for the first time since COVID began. It's an important milestone. It's solid profitability. You know, in the quarter, the miss was about fuel prices. Fuel prices went up a lot, particularly New York Harbor fuel, and that is volatile and goes. But the biggest challenge that faces us probably for the next 12 months is all the infrastructure challenges around aviation. It's maddening to us at United right now because we got ahead of the curve. We've been hiring. We got 10% more pilots per block hour than we had in 2019, just as an example. But, you know, you look at the mess that's happening in Heathrow or some of the other challenges we've had with air traffic control or other things around the system. And the system just can't support our flying. And our customers and the airline are at risk. And so what we've done is just pull our capacity back. All the costs are still there because we're prepared to be a much bigger airline. We have the people to be a much bigger airline, but we're going to be a smaller airline until the system can support it.
Which brings up the question. You're pulling back your capacity for third and fourth quarter. You are not growing as much as you previously planned for next year. How long does this last? Is this something you expect to be worked out by the end of the year, or does this go to the middle of next year, if not farther beyond?
We're not sure. We can't be sure because a lot of these are things that aren't in our control, but we do see progress. I mean, you know, you take Newark, which was frankly, a disaster in the second quarter. The FAA has worked with us. They've been very responsive once they saw the impact on cutting the flights there, staffing the FAA, the air traffic control desk better. So we're seeing progress across parts of the system. Our base assumption is, though, that it's going to gradually get better, and we're not going to get back to normal utilization and normal staffing levels until next summer. And so we're going to gradually improve. It's going to take to next summer to get there.
I was just in the UK. Came back yesterday. Heathrow is an absolute mess. I got out, but I know other people who were on a United flight. Their flight got canceled because of a crew shortage, or it said crew when they were told. They were notified just a couple of hours beforehand. Couldn't get rebooked by you guys for at least a couple of days. Ultimately had to fly on another airline back. It raises the question. There's so much demand to go to Europe, but when people hear these stories or they see the lines at Heathrow, does it cut into the future demand? And how do you do better by the customer?
Yeah, so that's the reason we're pulling down the schedule, is to do better by the customer. And because this is, you know, frustrating to us. We told Heathrow how many passengers we were going to have. Heathrow basically told us, you guys are smoking something. You're not going to have that many. And they didn't staff for it. And so we're being forced to cancel flights because Heathrow can't accommodate the flights. That winds up being crew issues because you've got flights that are delayed, and the ripple effects just spill over. But it's really frustrating to what it means to our customers, especially when we planned and prepared for this, and we staffed up to support this level of operation. That's the reason that we're cutting capacity for the balance of the year. We're essentially going to keep flying the same amount that we are today, which is less than we intended to, but not grow the airline until we can see evidence that the whole system can support it. Because we and our customers are on the front line. Like, we were prepared for London Heathrow, but when London Heathrow calls us a day before and says, you got to cancel 3 flights tomorrow and you got to cap the load factors at 75%. Like, there's just nothing we can do. And so what we're doing is just building more buffer into the system so that we have more opportunity to accommodate those customers.
Scott, Sarah has a question for you. Sarah, go ahead.
Hi, Scott. Sarah Eisen here, Fast Money Set. You know, a lot of the problems you're talking about, gas prices and capacity, haven't heard much on demand. Are you seeing any shift here when it comes to the consumer, especially in the U.S., as we start to worry about the impact of high inflation and higher interest rates and what that's going to do for consumer discretionary spending?
Yeah, the short answer is we really don't see any evidence of it at all. And I think one of the things that's unique for United Airlines in particular, but even aviation in general, is that while we probably do have a slowing economy happening right now, and all else equal, that would cause revenue to go down, we have a tailwind that's increasing every day, which is we're still in the COVID recovery. Business travel, we expect another step up. Everyone tells us, all our clients tell us we're going to see another step up in September. International is still on the comeback. So we're just in the 6th or 7th inning of the COVID recovery. And that, for now at least, is counteracting any of the headwinds from a slowing economy. And we actually see 5-point sequential improvement in revenue in the third quarter.
So given that, What do you tell somebody who's looking at booking a ticket, let's say for the holidays? They usually book it maybe a month and a half in advance. Is there going to be fewer seats available if I'm flying during the holidays?
Yeah, unfortunately, there still are going to be fewer seats available around the whole system. And really, this is because the infrastructure around aviation can't support it. And until the infrastructure can't, the responsible thing for us to do is pull the schedule back so we can be confident of reliability for customers.
So book even earlier.
You should probably book early for Christmas. But we're going to fly less so that we can make sure we have reliability. We were planning to be back to 2019 levels in Christmas, and we're now going to be 10% smaller. Even though we have the staff, even though we have the resources to do it, we're going to be smaller just to make sure that we can cover for all the things that are outside of our control.
Scott Kirby, CEO of United Airlines, on a day where they're back in the black, Sarah. That's the good news. But you see the operational challenges, jet fuel, a lot of the cost issues that are out there, and they're facing them along with the rest of the industry. Back to you.
And Heathrow, asking what he's smoking. Phil LeBeau. Phil, thank you very much with United CEO Scott Kirby. Let's trade it. Karen, it's tricky because a lot of these things are out of their control, but clearly it's affecting their size and their business.
And just the business model being an airline, right? There's so much fixed costs, and you have to be, you need that infrastructure, and then to have the, the ability to fly and just the things that have been thrown at him in the last 2 years. It's kind of amazing. So extraordinary job. But unfortunately, I sort of think they're pulling forward some of that. Melissa, I always talk about, are you going to go visit your in-laws another time? Right? No, this will do for a while. So I wouldn't be surprised.
Maybe not your in-laws, but your friends.
But I wouldn't be surprised if demand does pull back some. But what a difficult environment to be in. I don't know in any airline exposure.
What's really troubling here is that the cost per available seat mile, or the CASM number, is up about 32% relative to 2019. And yet the total revenue per available seat mile hasn't even gotten there yet. So they're talking about where their load and where their capacity is, and really where some of their numbers are relative to 2019. In a pre-pandemic environment. Good news, but what you said is that it is the things that they can't control. And for airlines, it's always the things they can't control. This is the problem. We worry about airlines and costs because airlines have never done a good job with this. And right now, airlines on a multiple basis, which had re-rated 3 or 4 years ago, frankly, they're getting cut. And estimates, I think, from the street are probably coming down on 23, even though the demand profile looks better.
And it was interesting, Courtney. Kirby mentioned not seeing any weakness. He said that they're expecting a step up in business travel demand as well. But if we are heading into a recession and we're starting to see job cuts go up and spending cut back, you do wonder what happens to that core, very profitable piece of business for them.
Yeah, I think the question is how much, right? Because they clearly have way more demand than they can keep up with. And demand is clearly not the problem with the airlines right now. But I think what you want to take a look at is that, like United specifically, they're a lot more international focused and business traveler focused. And I think that's where something like your Deltas, your Southwest might be a little bit more or less susceptible to some of those changes, as if companies aren't going to start sending people out, if we're still having people in the offices, they're not going to be quite as effective. So I would actually stick to some of your more U.S.-based airlines if you're looking at them.
What about you, Dan?
Yeah, JetBlue, I think that makes a whole heck of a lot of sense, just given the domestic and the lack of your point about business travel, I think, is a big one. I mean, like, we spent a lot of 2020 and early 2021 saying that Zoom was taking market share from the airlines. And now I think a lot of businesses have a very logical solution. You also have a hybrid sort of work environment. So at some point, I do think as companies are rationalizing costs, there's a really easy one to do right there.
Especially with these ticket prices.
Yeah, no doubt about it. But again, I mean, the pull forward, if we are going to go into a recession, you're going to see a bunch of this activity slow. He's not seeing it right now. They will. And the other thing I'll just say is great job executing in a very difficult environment. But I think there was kind of heavy-handed. There's a lot of blame being placed on, the airports and stuff like that. I mean, to me, that seems like an easy one right now. But in a quarter or so, I don't think it's going to be as easy to blame that if you don't see the sort of recovery that they're expecting and the demand does wane a little bit.
Yeah, got to see the cancellations cut back, too.